Hey folks, Dan Frio here, the rate update. Today is January 21st, 2021, and I hope you like my reports in the morning. I'm doing reports for the stock market. I call it an acronym of SCRUB, S-C-R-B, stocks, crypto, real estate, that's my forte, and bonds. And so I hope you like that. I post it every morning. I usually try to get it in by 10 a.m. Central Standard Time. So that is my report in the morning, and then I'll do my report like I do every day, the rate update, giving you guys the insight on the mortgage market, housing market, and real estate in general. So what happened today? Kind of a lackluster day, and I'll take it. And we're going to show some hot markets in the area where you guys, if you're in these areas, you might be looking to buy. And I'm going to show you where if I can help you in those areas, because I'm getting a lot of questions about, hey Dan, what areas do you serve? So don't go away. We're going to get right at it here in a minute. I just had a huge staff meeting, and the discussion basically was the housing market in 2021. There's a lot of people saying, oh, the housing market's going to crash. I am on the complete flip side of that. I'm saying the housing market is going to be crazy, crazy, crazy good. Here's why. Let me go back the other realm and saying why all people are saying, the housing market's going to crash. And again, most of the time, if you go back to a lot of these videos, and this is why I started the YouTube channel, is a lot of the people that go on YouTube and discuss all of these things that they're talking about, many of them, that's all they do for a living. Their livelihood is based on you guys watching their videos. My livelihood is mortgages, and I've done this for 33 years. And that's all I've ever done basically my whole life. I went to college, got a degree in economics, and got into the mortgage business. And that's what I've been doing ever since. So I start watching a lot of videos, and I'm sitting there saying, the guy, they're kind of right, but they're kind of off. So that's what prompted me to do this channel. So a lot of clickbait that you're going to see right now, and I even scan this, and I chart the markets, or I chart all the algorithms and such to figure out, what are people going to click, or what are people clicking? I guess I'll say it that way. And one of the biggest things that come up is 2020 housing crash, and people were just feeding off of that. And a lot of the pieces of that puzzle, or basically the direction people are going with that, is there's a lot of people, because of the pandemic, that are going to lose their house, and because of the forbearance and other things. Okay, so let's go down that path, and then let me tell you my path on why I don't think we're going to have a housing market crash. Okay? Forbearances. The Biden administration is jumping in, and is the Democrat Party, and I don't care what affiliation you are, I'm just saying, Republicans, their stances are here, Democrats are here. One of the Democratic stances is, and I'll say it in this situation right now, is relief. And stimulus. And there's going to be a lot of stimulus you're going to see probably in the next 2, 3, 4 months. There's a $1.9 trillion stimulus package on the table to start, and there's more to come. Okay, so the stimulus packages are going to help a lot of people. Then there's going to be, the administrations aren't stupid. And they've realized this back in 2008, 9, 10, and 11, when the world basically just crashed. And Biden is well aware of what can happen because of that. And I can almost assure you they're not going to let that happen again. So what's going to happen with forbearances is there a lot of the banks are going to work with you. Plus, I can almost assure you that there's going to be programs to come out to get you or help you out of the forbearance. And we have those now, and I have a video that I just did the other day in regards to forbearances, and I'm going to do a more in-depth one early next week to walk everybody through, when your forbearance is up, what do you need to do? What should you better do? How should you prepare when that happens? And don't put your head in the sand and hope to God at that time things just happen to miraculously work out for you. You need to prepare for that. So that's one. So the forbearances, it never used to happen in the past. What happened in the past is they did mortgage modifications, and the banks hosed people. They hosed people. I'll be completely blunt and frank on that one. I see many times, and I actually reviewed a file just the other day, and it's the first one I saw in years. The people, they had a loan. The modification actually took the balance that they owed, threw it on the back end. Then they adjusted their current balance on a 9% interest rate and put it on a 40-year term to help drive down their monthly payment. Well, yeah, did that help out the consumer, the homeowner? Yeah, if you want to say their payment went down $100. Did that really help the homeowner? There is no way that helped the homeowner other than save that home. So if you want to say save the home, financially, it was a disaster for the homeowner. For their life and not having to get foreclosed on and move out and all this other stuff, it was a save. So I'll go down that route, and I'll let you just determine on that part of it. Forbearance is a whole different animal. So you're going to have forbearances. I'm almost sure you're going to have the Biden administration come in and put in parameters to help people refinance their mortgages. The reason why this is so much different than it was before is the housing market was so overinflated at the time. When the foreclosure surges started at that time, driving down some values, everybody became underwater. My house, I was almost underwater, and I was in there at that time for 10 years and put 20% down. So right now, most people, because we've done prudent loans throughout the last 10 years, most people have equity in their homes. The forbearance is going to help them prolong some of this stuff, but if you have to get out of your house, you can most likely sell the house and even make some money and leave. Okay, so that's one. We're not going to have 90% of the nation underwater, meaning you owe more on your house than it's worth. That's number one. Number two is the stimulus package is going to help pump money into people's pockets so they can make the payments. So that's number two. Okay, so those are the two biggest benefits of that. And because of that, that helps the current homeowner. Now for buying, you're going to have incentives. The Biden administration is talking, and they're probably most likely going to pass, a $15,000 home first-time home buyer credit. So you're going to get $15,000 to buy a house. So if you have some equity in your house and you just get to the point you can't afford it and you sell it, you still can sell it and make a little bit of money. And then those that are looking to buy it, they're saying, well, rates are at historic lows, plus I'm getting money, free money, basically. And nothing's free in life, but we'll go with that. Free money to buy that house. So my prediction is you're not going to see a housing crash. You're going to see stability in the market. Will we have huge appreciation? Maybe not, but maybe. Because if the stimulus package helps keep people in homes, you have a forbearance or a modification or a refinance program that can help people once their forbearance is up, refinance, so they're really not getting put into that worse of a position. You're going to have people staying in their homes there. You're not going to be forced to sell your house. So then new homes, new construction, people that are looking to buy, sell, move, whatever, they're going to have incentives between rates and the first-time home buyer credits to buy more homes and new homes. So my prediction is 2021 is going to be an unbelievable market if you're looking to buy a house. Okay, so that's my take on the real estate business right now. So now let's get on to why you come to my channel. You come to my channel to figure out, Dan, what's going on in the mortgage rates? Well, first thing is, let's see some of the hottest markets in the country, and why I'm doing this is I pull this because I get a lot of feedback from people saying, Dan, where can you lend? I can lend in almost all the country. There's two areas that I don't, is New York and West Virginia. And the crazy thing is, I'm a mountaineer and I graduated from WVU, West Virginia University. I can't do mortgages for my own family, but that's okay. So where, some of the hottest picks, Phoenix, Arizona, and Tampa, Florida. I am licensed in both those spots. You scroll down and you find some of the other areas. Texas can do it. Phoenix can do it. Nashville can do it. Tampa can do it. Denver can do it. So if you're in any area out there and you're like, Dan, can you help me? Just shoot me an email and I'll give you my email address at the end. Ask me if I can help you. In most cases, I'm going to be able to help you. So let's get on to rates. Today, the MBS market is down 6. What do we know about the MBS market? Well, basically, and I'll do it quickly, hold on, I just got a click in my thing. As this number goes down, it's red. That means the price of a bond went down, means rates went up. In its simplest form, there's an inverse relationship. So that number's down, rates are up. That number's up, rates are down. The bigger the number, the more extreme adjustment in the rate. So we have a down 6, which is nothing really major, because last week or the last couple weeks, we went from a 104 to a 102.25 down in this area. That's a huge move, especially in like 5 days. And then I said, we should recover right into this range here. And why? Because the Fed is trying to stabilize this market by buying bonds, municipal bonds, government bonds, mortgage-backed securities, and so forth. And they're trying to stabilize the market. Well, if you want to figure out where is the stabilization lines, we're going to look at all these lines. I'm going to give you some quick little references. These lines that go across here, if you do any charting, if you're watching cryptocurrencies or you're watching stock markets or anything, you're going to see lines that go across here, and those are called Fibonacci levels. Okay? These are basically resistance levels, resistance going up and resistance coming down. You notice that we hit this resistance line, I'll go over here. Here, this resistance line was one stubborn resistance line. We hit them all in these areas here. When we hit here, you can go back to my video on that day. I basically said, this is kind of scaring me because we can't peak that, and there was just a little bit of chaos going on at this time. So I said, we're probably going to get a little pullback down into this area. I never thought in my wildest dream we were going to get a pullback all the way down to here, because we blew through these moving averages. These moving averages right here, and I'm going to get rid of the 200-day moving average. Let's click that just to make it a little more simpler. We have a 100-day, a 50-day, and a 25-day. And you can represent those by right here. That's the 100-day, 50-day, and the 25-day. If you move those around, you come to a crosshair right about here where these two cross. That's where we should be theoretically trading in a normal world. Okay, we are not in a normal world by no means, but that's where we should be trading. So when we were down here, I said, guys, hold on, because I'm anticipating us to get back here. I didn't think we'd get back there as quick as we dropped down to here, but we're getting there. And every day we're seeing a little bit of green, and every once in a while we'll have a little bit of pullback, as we did today. But I think eventually we're going to stabilize back into that range. So my thoughts is within the next week or two, we're going to be back in this range right here. That might be, you're looking probably at a 0.1 or 0.2 reduction in rates. Okay? I don't know what tomorrow's going to bring. This is my educated analogy behind all of this. So now let's go on. What happened just today alone? Because like any stock, you could look at a stock and say, okay, the stock was at $100 at the open, $100 at the close. It did nothing all day. That's the farthest thing from the truth. Usually stocks bounce all over the board to settle where they settle. So today we saw the market open and crash and then rally back. This is great news right here. And then it kind of just found its equilibrium right here. So I'll take this chart. It's a good chart. I like it because it's showing me we have resistance down in here and we keep kind of moving upwards. Economic calendar for today there was jobless claims. If you watched my video earlier today, the jobless claims came in better than expected, but they still, excuse my French, suck. There's like 900,000 people that filed for unemployment last week. That is terrible, guys. But here's another chart that I watched. This is my daily chart that I post. This is basically to give you guys an idea where rates are and what rate kind of mortgage rates you can anticipate getting. So we go over the 30-year conforming, jumbo, FHA, and VA. You can see last year at this time, we were right around the high 3s, low 4s. And right now we are in the high 2s or mid 2s. The differential basically is, and I'll go through this, a 1-day delta means a 1-day change. No rates changed today. 7-day delta, that's where we were last week. Rates are down 5 basis points on the conforming, 7, 8, 5 respectively over here. What a basis point is basically 0.0 this number. Okay, so 5 means 0.05 would be added or subtracted to that number there. 100 basis points is 1%. So take it accordingly. So 5 is 5/100ths. All right, so that's that part of it. And the weekly, these are charts that I go on a weekly basis to figure out, the more data that I have to consume so I can be a more informed mortgage advisor to you. And I'm not going to go through this and bore you to death. But basically, the Federal Reserve came out, Federal Chairman Powell came out and said, now is not the time to do anything in meanings regarding tapering the purchases of bonds and mortgage-backed securities. As I was stating here, the Federal Reserve stepped in and they started buying mortgage-backed securities to stabilize the market. Just to give you a little bit of insight, let me show you where we were when the pandemic hit. Look at that. That is, and again, down means rates are up. That was catastrophic. And then within a couple weeks, we brought back, we came back to life, I guess I'll put it that way. So the Federal Reserve has been doing a fantastic job. All of this stimulus money is actually devaluing the dollar. So the dollar, I try to watch this on a daily basis as well. I'm trying to add this to my channel, just saying the dollar is weakening. And one of the reasons why I follow this too is in the mornings I post a market update with stocks, crypto, real estate, and bonds are doing. And crypto is highly tied to this number, and such as Bitcoin and some other things that you might be following. And that's kind of the new in vogue. You can see here the Dow is down 12, the S&P is down. So there's really not much movement at all in the markets today. I think everybody's just kind of, the dust is settling after the inauguration because I was even surprised that there was no events took place during the inauguration, which I mean is protests and things like that they thought were going to happen. This newsletter I just posted, you can see some of the information that we came out with today. Construction surging to the highest level in 15 years. Mortgage rates are easing back. So we just reviewed all of that on the channel. So now what I want to ask you guys, a couple things, just bring up the speed. If you like my videos, please, all I ask you to do is just, it's simple. Won't even take 5 seconds of your time. I take one. Click the subscribe button down below. Click the thumbs up bell. Hit the bell so every time I do post a video, you get an alert. I'll try to title my videos, if they're anything other than the rate update or the market update, something specific. So you know what I'm talking about. So if it's an interest of you, you can say, okay, I'll watch it. Like if you're 20 years old, you don't need to know what a reverse mortgage is. Don't watch it. Don't even waste your time, unless your mom, grandma, or somebody like that might be able to help. First-time homebuyer programs, down payment assistance programs. Well, if you're retired and you live in an apartment, you don't care about a down payment assistance program, but if there's many out there that do. So all I do is ask you to do those things for me. Now you're like, Dan, how do I reach out to you? So here's one thing I ask people to do on a daily basis, and I get a ton of these things. If you're in the market for a mortgage right now, send me your quote. The reason being, you should always get at least a backup quote, unless you're using me first, because you can trust that I'll give you the best deal in town. Send me that quote. So if you apply for a mortgage somewhere, within 3 business days, they have to send you legally a package. In that package is going to be what's called a loan estimate or a fee worksheet or something that gives me your loan amount, the rate, the term, the whole ball of wax, and it tells me if that rate is locked or not. I caught a few people that changed they weren't locked and they changed it to locked. And I got them because I'm like, remember, I do videos like this and I say, watch if your rate is too good to be true. Well, unfortunately, I have some bad characters out there that sent me in some data that they altered. So please don't alter your data, because I've done this a long time and I know what's out there. But send me that loan estimate you have. If your rate is 3.5% or higher, look into doing something. I'll do a mortgage analysis for you. You just tell me the term you want. I'll give you my true, honest opinion on what I would personally do. That's what I do on all my videos. And then we can look at the numbers. Let's see if it makes sense to you. It might make sense to me. It might make sense to your neighbor, but it might not make sense to you. And you're the person that counts. So that's what to do. How do you get me that information, or how do you reach out to us for our help? Well, pretty simple to do. All you need to do is go to therateupdate.com. And at the bottom down here, you're going to see our phone number. Here's our address as well, and all of our social media. I'd love for you to track us through this. I post on all of these daily. But if you want to reach out to us, probably the quickest and easiest way is give us a call at 844-775-LOAN. That's 844-775-5626. Or email me. Like I said, if you have your loan estimate, your mortgage statement, or whatever, email it to me. My email is D for Dan, Frio, which is Frio, at preferredrate.com. Or if you just, hey, I just want to get this started, hit the apply now button. Or if you're looking to buy a house, hit the home purchase qualifier. This will send you down a path answering some questions. Based on those answers, it guides me or helps me determine what's the best program for you. That's if you're buying a house. This is if you're refinancing a house. Right here is if you want us to give you a call because you think you might have a weird situation or a unique situation. Click here, just answer some questions, gives us a little bit of feedback on you, and then we'll give you a call. It is not a hard pressure sale. I promise you that. Basically, we're going to lay out the information, what we can or cannot do for you, and then leave it in your lap. And you can say, okay, let's do this, or nah, I'm good. Another feature we have, and I pay for this service, it is free to you. If you want to get a home valuation, click here, fill out some information. I don't sell the data, don't really do much of anything. It just helps me and you monitor your home value, and the finances on your home. A new venture that we just did is called creditscoresandmore.com. If you go to that site, the only thing I want you to do truly, and you can use all the functions, scroll down, and right here, you can get a free credit score. There is no gimmicks, guys. There is no strings attached. The data's nuts. It is a free credit scoring system. And if it asks you to subscribe to anything that you might have to pay for, I'm giving you the okay, don't do it, okay? All I need you to do is that system. If you really want to get your credit score, you're like, I am a credit score fanatic. This is a fantastic system. It'll actually give you all 30, 32, or 36 of your credit scores to you, as well as monitor your credit. A great system right here. If you need any credit assistance or identity theft protection, you can get those right here. But the one thing I would highly suggest you do is just go into here, get a free credit score, because if you send me your mortgage statement, you're like, Dan, what can you do for me? One of the biggest things I need to know, what's your credit score? And this will give that to you. So that is it for today. Sorry for the lengthy one, but I was excited. I love what's going on with the markets right now, and some of the other programs that are coming out that I'm going to share with you either tomorrow or Monday that I think you're going to be excited about too. So God bless, take care, and I'll see you tomorrow morning. Bye-bye.